So what if I told you there's a way to not only buy your home and have the seller pay for a lower interest rate and pay for your future refinance? I had a client that was feeling absolutely stuck because he locked in a 3% interest rate a few years ago and was wanting to buy something new and thought he couldn't afford it. I showed him how he was still able to lock in a low interest rate and have the seller pay for $25,000 worth of his interest up front and even cover the cost of his future refinance. So here's what you're actually going to learn from me today. Why this market is completely different than 2008. We are not coming into a housing crash. We are in a different time. It's 2025. I'm going to show you how supply and demand are creating opportunities that most people are missing. I'm going to show you the exact strategy, the 3-2-1 buy down, that lets you buy your next home, keep your payment low, have the seller pay for your interest for the next 3 years. And how this move can set you up for a refinance, which the seller is basically going to pay for using this strategy. By the end of this video, you're going to walk away with a clear plan, a real strategy with real numbers and real proof so that you are no longer stuck and you can buy that house. Sound good? Let's get into it. You're not stuck. You haven't been shown the right strategy yet, right? I had a client who was probably like a lot of you, had a really low 3% interest rate because they bought a few years ago, didn't think they could buy anything else because every time they ran numbers, the payment was almost double what they were currently paying. And so it's not even worth it. But they didn't know about this strategy. And once I showed it to him, he was able to buy a house, lock in a low interest rate. Yes, locked in for the first year, right in the 3% range, very similar to what he had, and really set him up for financial success. And we are in the perfect market to do this. This is who this video is for today. You might be feeling stuck if you bought your house between 2019, 2021, you locked in an extremely low interest rate and you don't want to lose it. You're feeling trapped because prices are high, rates are high, you wish you could upgrade, you want to relocate, the house just isn't working for you. So if this sounds like you, keep watching. I made this video specifically for you today. So who am I? Why should you listen to me, right? What do you care? Well, my name is Braden Hatch and I've been a mortgage lender for over 11 years. I have seen every single type of market that you can think about, the ups, the downs. I personally bought when interest rates were even higher than they are now. Home prices were lower, but I have seen multiple perspectives along my journey as an 11-year loan officer. I started as a mortgage banker, got into retail lending, and now as a broker, I feel like I have all of the tools and the best possible interest rates, because I've got wholesale rates, to really make the best deals happen for people. Because that's who I care about at the end of the day, are my people. Think about it like this. If you're going to buy your wife a brand new Gucci purse, would you rather pay the retail price or a wholesale price for that purse? It's still the same purse. The only difference is how much you're going to pay for it. That's the difference in what mortgage brokers do compared to retail mortgage lenders. We offer those wholesale interest rates because it all ends up at the same place. If you're getting a conventional loan, it's going to end up with Fannie Mae or Freddie Mac anyway. Might as well pay a lower interest rate. And in my time as an 11-year mortgage broker, I have helped thousands of clients purchase homes. I've seen all types of scenarios, all types of situations, and I can promise you that I can almost always find a solution. And if I can't, I can tell you what you need to do to make what you want to happen. So first of all, let's talk about the market. Today's market is not 2008, guys. Let's look at 2008. There were over 3.7 million homes for sale. In addition to that, there were very low household formations. So what household formations means is less people being born. There weren't as many people in the United States in 2008 as there are now in 2025. And there were a shit ton of homes. So what is this? This is classic supply and demand. This is very low household formation, lots of homes for sale, oversupply disaster, not to mention lending was a shit show back then. That was back when anybody could, this was before the mortgage reform, anybody could get a loan. They did those ninja loans where there was no income verification. It was insane. That is not today's market. Let's look at the numbers side by side. Today, in 2025, compared to 2008, where they had 3.7 million homes for sale on the market, it's less than a million right now. And we are in the highest household formations we've seen since the 1970s. There's more people being born. There's more people on the planet. There's more people moving out of the house. Why do you think so many kids are staying and living with their parents these days? There's a lot of people. Now we have the opposite problem we had in 2008, right? Supply and demand. We have an undersupply of homes and an oversupply of people. And builders are not picking up the slack. They're building 40% fewer homes than they did in '08 because they don't want to get burned again. They got burned in '08 and a lot of companies went belly up because they were overbuilding and they weren't paying attention to basic economics. That's not the market or the economy we live in today. Undersupply, and it's creating stability. So I will fight anybody that thinks a housing crash is coming because the numbers say differently. And until the data changes, again, I'm a very open individual. I don't pretend to know it all, but I do study this shit pretty religiously, and this is what I do. Bottom line, high demand meets low supply. This creates a fundamentally stable market with real opportunities for strategic buyers. Don't pay attention to the fear. The news, mom, your dad, whoever, they're saying don't buy because interest rates are too high, home prices are too high. The ones that are winning right now are buying because mortgage rates are higher. Let's just address the elephant in the room. Mortgage rates are not too high. You just don't understand how to have the proper mortgage scenario to make it work for you. The real winners, they're buying today in this market because it is a buyer's market. Homes are sitting longer. Right now, sellers are willing to pay for concessions. If you don't know what that is, we're going to get right into it. A lot of homeowners have that 3% interest rate. They don't want to list because it means giving up that low payment. That's ultimately what matters, okay? Stop focusing on the interest rate. It matters how much money you're spending every single month. What's wild to me is people will complain about interest rates and they'll complain about having a higher mortgage payment, but they have a $1,200 a month car payment for a Toyota Camry. That's $1,200. That's money that you're spending every month. It all comes down to dollars in and dollars out. That's what we care about, not the interest rate. With me so far? All right. The other thing is we do have fewer listings, right? Anybody that's gone home shopping in the last year knows that there's not a lot of options. There's just less homes. And this is part of it because so many people aren't even willing to sell. They don't think they can. And so when buyers are looking to buy, they have very limited options and they're higher priced and mortgage rates are higher. But I'm telling you, this is such an opportunity. We are officially in a buyer's market. It is October 2025. We have massive opportunity because this means that sellers are willing to do seller concessions, which is one of my favorite things in the entire world. A seller concession basically just means that the seller is giving you a credit. That credit or money can be used for this exact strategy that I'm going to share next to basically prepay your interest rate and get you honestly, with today's rates, a 3% interest rate or in the threes for the first year. And sellers are motivated right now, guys. They're motivated to work with serious buyers. So that means you can negotiate them to pay your interest rate down, pay your closing costs, and save actual tangible dollars, real money, long-term and short-term. The 3-2-1 Buydown, the secret weapon that most people don't know about. I used this strategy way back in 2009 when I bought my very first house as a 23-year-old kid. And to be fair, home prices were lower, but I still couldn't afford even a very expensive house back then. I was making 12 or 13 bucks an hour where I was at as a 23-year-old kid working for the bank. I spent 10 years in the financial industries before I even got into mortgage lending. So I know a lot about money, and I really attribute a lot of my success to making moves when most people were afraid. A lot of people told me that I shouldn't buy, that I couldn't afford it. And honestly, I started to listen to them until somebody showed me this 3-2-1 Buydown. A 3-2-1 Buydown is a 30-year fixed rate mortgage. It's fixed for 30 years. We're going to buy down the rate by 3% in the first year. So if we look at today's average interest rates, 6.36, 3 minus 6 is 3, which means year one, your interest rate is 3.36% for the entire year. That's the maximum savings within that first year, which is statistically your most expensive year in a home, right? You got to furnish it. You're going to paint it. You're going to put all your little touches to it. You're going to be spending a lot more money that first year than any of the other years because you're turning it into your home. This is a great way to get built-in savings for that first year. Again, tangible dollars that you're spending every single month or saving. And then year two, it is 2% lower than the fixed rate, meaning in the example of 6.36, it goes down to 4.36, which is still significantly below market value. And then we get to year three. Year three, it's 1% lower than the current market rate. Gradual transition, right? And we will get into the numbers in just a moment here as far as what this will do on an example property. And then years 4 through 30, it goes to the 6.36%. And guess what? If rates do drop, because I hear a lot of people saying, well, I'm waiting for rates to drop. I'll wait a year. I'll wait 2 years. Well, you don't have to wait any longer because you can lock in this low interest rate for the first 2 years. And then if rates do drop, like let's say in year 2 where you're paying 4.36% already and rates do drop to that, you can just refinance and take the lower rate anyway. And then you don't even have to worry about what happens years 4 through 30. And the best part is, we're not even going to use your own money to do it because this does cost money to do this, but we're going to have the seller pay for it. And this only works in markets like we have today, in buyers markets, because sellers, they need to sell and they're going to be willing to do this. I know because I see it every single day. I'm a very active loan officer here in Arizona. So let's look at a real example. Let's look at a $700,000 purchase price using this 3-2-1 buy down strategy. So again, this is based off of today's interest rate. I am filming this on Wednesday, October 8th. There are so many people that don't even try things, but I'm telling you, mortgage math is different than the rest of the world. Compound interest, amortization, like this is the nerd shit that I love that most people just have no idea how it works. And so I'm going to try to explain this in as clear terms as I possibly can. So here you go. For year 1, your interest rate, like I mentioned in the previous example, 3.36%, meaning that your payment is $24.71. At the current interest rate, that payment would be $34.88. So here's what you're going to do. Instead of offering $675 and getting a little bit lower price and having maybe a couple $100, maybe $50 to $100 less on your mortgage, do this instead. Have them cover $25,000 in seller credits. If you're doing a conventional mortgage loan on this $700,000 price, let's say you're putting 20% down, the seller can contribute up to 6% of the purchase price in seller concessions. This is less than half of that. This is like 3%. So we're going to have them cover $25,000. And that will pay for this 3-2-1 buy down. Year 1 alone, that's going to knock your payment down by $1,017, over $1,000 per month less for that first year, which will save you $12,205 in interest and real money for that first year. Year 2, the interest rate is 2% lower. So you go to 4.3, payments $27.91, still saves you $697 per month, over $20,000 total saved between year 1 and year 2. And then we get to year 3, it's still 1% less. Payment jumps up to $31.31, but that's still $358 less than what it would be if we just locked in the regular interest rate. So now we have a savings of $24,862. That's what the cost of this is. I'm not hiding anything. You're prepaying your interest except by being strategic and having the seller cover it. It's not actual money that's changing hands. They're using the existing equity when they sell their property. They take a $25,000 cut off the sales price, but instead of being directly off the sales price, they're giving it to you in the form of credit so we can use it to do this 3-2-1 buy down and prepay your interest. And my favorite part about all of this is for the naysayers that are just waiting for interest rates to come down, you're dumb because you can use this now. And then if rates do drop to this, you're going to get the same rate, except now you have the added value of you locked in at a lower total price because home values are going to continue to go up. They have been year over year, even in our current market. Maybe not high as appreciation as we saw 5 or 6 years ago, but they are appreciating consistently almost across every single market and especially here in Arizona. So the seller is literally prepaying your interest for 3 years and you didn't even have to cover it. And the best part about this 3-2-1 buy down that nobody talks about, let's say you do refinance in year 2, meaning that you're not even going to make it to year 3 and get that additional savings. That extra money, that money that the seller covered for that 3-2-1 buy down, it goes back to you. It goes back to you in the form of a principal reduction. So now the seller has not only prepaid your interest, but they have paid for your refinance. Because refinances cost, $3 to $5 grand, depending on the price, depending on if you're buying rates down and things like that. Now you get that. You still get that extra money. So you're not losing out on this at all. So I'm giving you the benefit of the doubt. If you're waiting for interest rates to drop, don't. Use this strategy instead and win and lock in the lower price and save on both sides of it. So as I mentioned, you get that built-in refinance safety nets. If rates drop, you win again. That's the hidden advantage here. If you refinance during those first 3 years, you capture the lower market rate and any unused portion of your buydown fund gets refunded back to you. You lock in a new low rate and get your money back from the original buydown. Scenario one, let's say rates don't come down. Guess what? You get 3 years of dramatically reduced payment totaling almost $25,000 in savings. You're still winning. And if they do drop, you refinance early, lock in the lower rate, and get a refund of the unused buydown funds. This is a win-win. I love talking about win-win scenarios, and this is how you do it. The seller paid for your rate buydown and your future refinance opportunity. What are we talking about, people? And this definitely beats a simple price reduction. And if you're a real estate agent watching this, higher sales price, that means higher commission, right? We all know that. It's just math. We're not trying to hide anything here. So real estate agents, you need to be talking to your clients about this. This is such a powerful win. If you have a home on the market and it's not selling, talk to me. Give me a call and I'll put a presentation like this for your specific property and we can put this together and show how this is a win for your seller, a win for you, a win for the buyer. This is how we all win in today's market. Sellers often offer a concession as a price cut or a rate buy down. But here's why the buy down is dramatically more valuable. With that $25,000 price reduction, yeah, it lowers your loan amount by $25K and your payment by maybe $125, saves you $1,500 a year. It's a one-time benefit that's spread over 30 years. But the rate buy down, it keeps it at full purchase price. This is how you can still sell at a great price. It reduces the payment by over $1,000 for that first year, saves $12,205 in the first year alone, and a total savings of $24,862 over 3 years. This is how smart buyers are winning in 2025. You're not stuck. You need the right strategy and you need to understand these numbers. Now, I know everybody's situation is a little bit different. So if you'd like to review your specific scenario, take a look at your existing property, the problems you're dealing with, monthly payment, let's run your numbers. See exactly how much you can afford with this strategy. You can book a free strategy call with me. The details are within this video, the link to book an appointment with me, or you can just take that loan application if you're ready. I'd prefer you call me first. I do like to go over specific goals because everybody's situation is a little bit different. It's a free consultation. It costs no money to talk to me and it's super easy to book some time. Take 5 to 10 minutes, explain your situation, and I can show you exactly how we can help you win in today's market and still lock in a low interest rate. This is something that I do. I love to do this. It makes me so happy because I'm a nerd and I love the numbers. And let me show you how I can make the numbers work for you. I am also a real estate agent, licensed here in Arizona. I have multiple partners that I work with that know how to use this strategy that can hook you up. Don't forget to like and subscribe. I deliver new videos every single week, and I'd love to hear what other problems you're dealing with. I need to know the real world problems. Right now, I know this is a big one. Everyone feeling stuck because I got that low rate. Here's how you solve it. What are some of the other problems you're seeing in today's market? I'd love to help you specifically and make a video just for you.